Hey everybody, Boris Haas from BK Forex. Welcome to our Forex Weekly Technicals for 11/4/11/8. Dollar domination continues. Question of the week for next week. As always, trading foreign exchange or margin carries a high level risk, may not be suitable for all investors. I ask you to read the disclaimer very carefully to understand all the risks associated with trading margin and to seek advice from an independent financial advisor if you have any doubts. Well, definitely been a very strong week for the dollar, especially against the euro. The euro just crumbled like a cheaply made suitcase this week after stalling at the 38 and basically now bringing back 300 points on this move over a period of 4 days. Just really been a very severe correction, really driven by the readjustment in the marketplace away from the idea that the Fed is going to ease continuously. The Fed is moving towards a more tightening policy with assumption that taper is going to be on the table, and the ECB, more importantly, maybe moving towards a more easing policy, given the fact there's deflationary pressures in Europe and there's pressure on the ECB to actually begin to do something to stimulate the economy. So this kind of readjustment that was really all anti-dollar for a very long time now is starting to take its toll on the euro. Everybody who bought up, of course, got killed, and anybody who's doing bargain hunting here is getting killed as well. Having said this, though, we have corrected now 300 points pretty much off the top, a little bit more than that, as a matter of fact. But we've now come to this very critical level. So this is really going to be very interesting to me as far as the week goes. Now, there's clearly a lot of momentum here in the dollar move, and there's certainly a possibility that we could slice through this like a hot knife through butter. But given the fact that you have this massive support level around 30, say 34.50 for argument's sake, that really starts out all the way from September and kind of held its way for a month and a half. I find it hard to believe that we're just going to be able to just slide all the way down to 33, maybe 32, before we're finding us some support. There's definitely a chance here that we could stall around these levels. At the very minimum, you could have sort of a very meek, mild rebound in the euro towards the 3600. Euro definitely is in a downtrend at this point, and the bias is certainly sell the rallies in the euro. But given how far we've come, it seems reasonable that there may be some level of support here at around the 34.50. If there isn't, if 34.50 is given, we come back down to 34, then the next level of support really comes in around 33. So that would be probably the extreme case of extension in the euro for the near term. But it's certainly been a very fast liquidation. I think caught a lot of people very much by surprise, and those that are trying to basically make the stand here are either brave or foolish. At this point, they look very foolish. They may be looking a little braver as the week comes by. In either case, the bounce in the euro, I think, really caps itself towards the 36 on the upside, but there is a potential here for a little bit of a bounce and a support as the euro holds its ground. Cable, similar kind of a story. Cable finally gave way as well today, but it also is coming in to some very key support levels here. This 59, this basically 58, 50, 59 level, pretty strong support level. And data out of UK is not bad. So you have to assume that there might be some buyers coming in. Having said this, though, classic double bottom, double top here, really nice big distribution. And certainly the ultimate downdraft could easily take us down to 5,700, which was the prior highs, would now become fresh support. So there could be another 200 points in the rally. But in the near term, I do think you could have a little bit of a stall, just simply on a technical basis, given the fact there was some serious support here. So bargain hunters, this may be the front of the week for you. But if the price pressure just does not cease, if the selling pressure does not cease, I would not be brave. I would be getting out of the way. What's interesting here also is that dollar yen, after it's kind of stalling yesterday, did close above 98.50 today. It looks relatively bullish. Now the really big battle in dollar yen, in my opinion, is going to be over this 99 level. And of course, it may not be resolved until we get the NFPs. The NFPs that come in at anywhere 150 or better, in many ways, are going to be taken as a bullish sign for the dollar, because it would mean that everything but the kitchen sink has been thrown at the U.S. economy, and yet, despite all that, the U.S. economy manages to generate a decent amount of jobs. That would create a much more stronger thesis for a Fed taper at the beginning of next year, and that certainly becomes more bullish for dollar yen as we go forward. So dollar yen really needs to clear this 99 hurdle to set itself up properly for the move towards the 100 and ultimately possibly towards the retest of the yearly highs. It still looks quite good on a technical level in a sense that despite all of these corrections that we're having, we are building higher lows continuously. And all we need to do now is just make higher highs, and that would create a very powerful case for a strong rally higher. So until and unless your dollar yen starts breaking towards lower lows, in this case, the most immediate low that I think would be concerning to anybody who's long dollar yen is 97.50. If we come back down to 97.50, that would change the structure of dollar yen completely towards a more negative bias. And of course, if we break 97s, that really would be a very, very negative development. But as long as we can just hover above these levels here, that's a bullish construct and the path of least resistance to the upside rather than to the downside in dollar yen. Aussie presents an interesting case as well. Aussie kind of battled for 2 or 3 days, but then had a big flip. If you remember, 2 days ago I said, let me just, I wonder if I could zero in on this. Well, actually, let's take a look at this on the weekly because I think you can see this on the weekly as well. See, on the weekly, this is a very bad weekly candle that we had this week. But even prior week, the flame out candle that we had on the weekly really gave you a very, very strong sense that there was further downside potential. On the daily, just a couple of days ago, let me see if I can zoom in on this. I talked about this, that this candle over here, this kind of flame out candle where we touched 50 and then ended up on the lows, this was actually yesterday, basically telegraphed to you that there was potential further downside action. And so despite the fact that we had relatively decent Chinese data, despite the fact that there was hotter inflation out of Australia, the Aussie came under the weight of the technicals and kind of buried itself below the 94.50 level for the time being. It does find a pretty decent support level at 94. So we're basically coming to this very interesting crux at the beginning of next week where everybody is sort of gung-ho to dollar, but at the same time, Euro has support 34.50. Aussie has support 9,400. Cable has support at 5,900. And so the really big question is going to be, will this support hold for all of these high betas? And are you going to get just perhaps a small bounce back for the first couple of days of the week until we get the more meaningful U.S. data as the week progresses? That could be a reasonable scenario as we start the week next week. But it's still very much a dollar's game to win or lose. Taking a look at some of the other pairs, Kiwi holding up in many ways much better and still doing this kind of a dance around 82, 83. Kiwi, in my opinion, is maybe in many ways a bellwether these days because it is the ultimate risk currency in the sense that RBNZ is the only one on the G20 block that's even communicating the possibility of raising rates. And so if that becomes a reality, Kiwi becomes a more capital attractive play, and therefore you see it just simply holding and not breaking down below lows. What's interesting to watch here is the lows here at 82. If we have another couple of days, or a day or two, maybe 2 days, where the lows of 82s have not really been broken, or sort of the lows here of 81.93 have not been broken, that would really create a very positive structure, positive base for a possible move up. So watch that as in many ways the bellwether for the risk trade, given the fact that it may become the leader of the risk trade because of its interest rate structure going forward. On the crosses, I don't think there's much of a development here. A lot of crosses are sort of at a standstill because of the differential between yes, that is fireworks, by the way, for those of you who are listening. I don't know why there's fireworks in New York City right now, but that is what you're hearing right now out of Central Park. I think maybe it's because it's Friday and that's why you're getting the fireworks. But anyways, that is what you're hearing in the background. Anyways, pound yen, this 57 seems to be a very interesting level of hold throughout really the 56.50. So we've had 1, 2, 3, 4, 5, 6, 7, 8 days where we really have not been able to break below the 56.50 level. And the longer we hold that, the more constructive that is. So in many ways, you get this kind of a situation where either you have the pound bounce back, or the yen continue to sort of move its way up through the 99s. In either case, there could be a very interesting cross trade here to the long side with relatively small risk. So 56.50 would be the risk here, and the long here would be from this level on. You may get a bounce here for 100, 150 points to the upside, given the fact that we have not been able to break the lows for 3 or 4 days, and we certainly set up a very decent looking base for a potential rally higher. That's pretty much it as the week opens up. There's certainly a lot of event risk next week, certainly a lot of stuff to look around for. But I think the most immediate issue is, will support hold in the high betas? That's going to be the $64 million question as we open up trading for next week. I wish you guys the best of luck and the best of trading. This is Boris Schlossberg. Over and out with fireworks in New York City. Take care.